Thursday Night Stock Charts Live. This is Bob Desmond over at the Contrarian Trader, and welcome to another Thursday. I have a shirt to show you. Before we go to the shirt, we're going to be talking about iRobot, the deal probably canceled by the EU. I don't know if this is definitive. I think there's a date of beginning of February for them to finally put the kibosh on it. We'll go over the headlines there. We'll talk about the share price in the after-hours session on iRobot. We'll talk about Amazon stock. How is it reacting? We'll talk about where to from here with iRobot. We'll also talk about their fundamentals. Also, we're going to want to talk about Disney. Disney is under potential, somewhat probably going to be a hostile bid by, I can't believe I just forgot this. Nelson Peltz. I had almost a senior moment there. I slipped it. I defy age. We're going to talk about the markets, where I think we're going from here. We're going to talk about Jamie Dimon and what he had to say about Trump and the MAGA movement. First, before we get started, hopefully the sound is good. I'm sure I have an audio check up here. Jody, hello. Franklin, hello. And of course, Franklin, the audio check. Word. Mr. Pete, welcome. All right, real quick, check out the shirt. I had this shirt made up. I finally found it, a little bit of dust on it. I may have winter in my hair, but I have summer in my shorts. I'm gonna put that on the merch shop. So expect this coming soon. I bought this shirt over a year ago. I cleaned out my closet. I found it tonight. I was so happy. I threw it right on. I've never worn it. I had it customized made. So yeah, I figured I would get that. I would get that response. RL, hey, welcome. Corey, welcome. Thank you, Pete. Corey, we got to Falcon. Where you been? Is it Christmas yet? It'll be here like that. It'll be here like that. Okay. Wow, for those comments, you'll get. You know what? YouTube has me already shadow banned anyway, so it's okay. It's all right. All right. So let's talk about iRobot. An announcement was made after hours that iRobot shares tank. They tank more than 30%. That's for sure. When I did my thumbnail for this live stream, the shares were down 40%. In reality, they were down lower than that after I printed out that thumbnail. So iRobot shares tank 30% on report of EU plans to block. Yeah, it's a plan. They haven't come out yet. It's not finalized yet. And we'll go to this article a little bit more in a second. But first, let's go to the after hours price action here. iRobot, we were down about 52%. We're down now about 33%. We're going to do some technical analysis here. We're going to go over the fundamentals, and we're also going to talk about what's the trade. Is there a trade to be had here? I think there is. So let's take a look at the news on iRobot. I highlighted what I wanted to go over, but it doesn't appear it's stuck. It did not stick. Amazon announced it would acquire iRobot in August of 2022 for $61 per share in an all-cash deal that valued the vacuum maker at $1.7 billion. $61 per share. I want you to remember that, because we're trading at $14.50. Now, one thing about the EU, the more left that they get. Remember, the EU, the European Commission, they're unelected. They're bureaucrats. And most of them are communists. And they are getting more and more belligerent with U.S. companies. And one of the predictions I have is that if and when Donald Trump becomes president again, that one of the major trade wars we're probably going to have is with the European Commission, because they need to be pushed back against, because they are pretty much anti-business, and in particular, American business. Moving on. The European Commission, the European Union's top antitrust enforcer, opened an in-depth probe into the purchase last July. The group warned the planned acquisition raises competition concerns, saying it found Amazon may hinder iRobot's rivals from competing in online marketplace. All right, so now this is all about, really, it's all about Amazon. They're going after Amazon. They don't want them to have a competitive edge. So the ruling, yeah, I knew I read this. The EC is expected to rule on the deal on February the 14th. And it doesn't appear as though Amazon, at least right now anyway, is ready to offer any concessions on the deal. So, what's the where to from here? Before we talk about that, let's take a look at the fundamentals of iRobot. And this is off of Investors Business Daily. It's not good. It's not good. In fact, it doesn't get much worse than this. There are no earnings. There is no growth rate. They're losing money. Sales are down. No debt. That's a surprise. Market capitalization is going to be a lot lower than this by tomorrow morning. But at the close, $658 million. The beta, which is a measure of volatility, is only 0.28. Very low volatility on the stock, but that is going to change tomorrow. And I think that we are going to have a trade to be had here in the coming days, because remember, the deal isn't dead yet. The headline would imply that, but Amazon could toss a bone at the final moments and, get the deal done if they really wanted to. So that's still a potential open door. Now, when it comes down to the insider sentiment, it has not been good, because you haven't seen any insider buying. You've seen grants awarded, but you haven't seen any buying. In fact, you had the CFO dumping nearly $500 million worth of shares. Excuse me, 400,000 worth of shares, it appears. No, it's $500 million. Yeah, that's unless they're doing that it's like $500 million in. No, it can't be right. The company's not even worth $1 billion. I think they're doing it European style. In Europe, they use a comma in lieu of a period. Anyway, it's a lot of money. Habara Faris dumped a bunch of shares as well. So insider selling pretty heavy. And I don't think those are shares. Share price is 38.7. No, it is. I don't know where they have the value, but they have a dollar sign here, and I think this is the value column here. Very confusing. I think this is the number of shares they dumped, and the dollar value, you could almost see a dollar sign there. It just doesn't populate. Maybe my ratio on my screen is off a little bit. Let me see if I could expand that out. No, it's not doing it. Okay, so insider selling. And in terms of, do we have a trade here? I think we do. The question is, when do you enter? Because what we're looking for here is a short covering rally. And going into the close today, actually, as of the end of business on the 29th of December, that was the last report, there were 2.8 million shares held short. Now, I would argue that that's probably higher by now, And I'll go to the chart in a moment. And when you take a look at the number of shares short, sorry about this, it's 814, excuse me, average 3-month daily volume is 814,000 shares. So you're going to have a few days of a short covering rally, and you're going to get these shares are going to get hammered tomorrow morning. I'm not sure if there are any shares available to short anymore, but I think you're going to get a short covering rally fairly soon here. Why? It's because this is a monthly chart, and this is January. So you had X number of shares short in December. That was on the 29th. Look at the damage that's been done so far in January. So you could bet that that short interest number has only gone up. So I think that what we could probably do is look for support. That's pierced right now. We may get an overshoot below $15 a share tomorrow morning. And so you could buy them right now if you wanted to. Below 15. Where are they trading now? I would wait for the morning sell-off personally. We're trading down to 14 bucks a share. If you really get a big overshoot to the downside, we could trade as low as $7.40 a share on iRobot. So I would wait. I'd wait and see how the morning plays out tomorrow. Do we get a half hour, an hourly reversal bar? And then we see some buyers stepping in. But I would wait for that first hour of trade to get past this. Let's see whether or not it's going to be a one-sided day, which it appears right now it's going to be. When I say one-sided, what I mean is that you're going to get, all you're going to see is selling all morning long. It could last all day long. You never know, though. So at some point in time, these shorts are going to need to book profits, and I would like to be a part of the trade if and when they do. So I wouldn't go buying the shares right now. Normally, if you have institutions out there that want to dump their shares, they're going to do it during the normal hours session. So you want to make sure that you give those guys an opportunity to dump all they can. And then after they're done selling, you step in, and then you could start to nibble at good support levels. So what I want to do here, I want to know we're going to get this to trigger twice because it's going to definitely fire off once tomorrow morning on the gap down. And then what I want to do is I want to create another alert here at this 740 mark. And I want to know if we hit that support level, look at volume, possible buy. I want to see whether or not volume is dropping off as we hit that support level and whether or not it's safe to go dipping our toe in the water on iRobot. So that's the shot there. The shares are in big trouble. This is not reflecting the after hours trade. 15-minute chart will. We appear to be on an intraday basis holding 14 bucks a share at current. The Fibonacci retracements brought you down to 1250, right on the dot. So tomorrow's going to be an interesting day for IRBT. Let's go back to comments. Pete, did you see the theme of Davos Summit? Yeah, I saw that. Yeah, that's funny. Tesla fading after hours. Yeah, Tesla's they held support today, Talon. They held support today. Yeah. What kind of volume do we have here? Not a ton of volume. Not a ton of volume. I wouldn't worry about it too much. Mark, good evening to you. Yeah, please, if you could hit the like button and subscribe, it really helped me out. Thank you. Why is RRBT? You must have just checked in. The EU is probably going to block a deal with Amazon, the acquisition by Amazon, which was announced back in August of 2022, all cash deal for $61 a share. So I think that this has been a foregone conclusion for quite some time, because when you take a look at the chart here of iRobot, I mean, this has been a basket case for a long time now, and probably started. Well, actually, right after here was the announcement in, was it 2022? They announced the acquisition in 2022. They never believed this deal was going to happen. The EU only opened up their investigation in July of this year, and it's been in a downtrend ever since that deal was announced. So I don't think the street ever really thought it was going to happen. Think about it. This is when the deal was announced. So it was improbable that the deal was going to happen. The street was telling you that. All right, on to Disney. Nelson Peltz is launching a blitz on Disney. Here's what he says is next in his proxy fight. Tryon, I guess that's his fund, will release a dense white paper explaining its full case for why investors should elect Nelson Peltz and former Disney CFO Jay Rasulo in the coming weeks. That's to the board. Peltz said in the CNBC interview that he and Rasulo will become like Batman and Robin if they get elected. Yeah, to Disney's board. Earlier Thursday, Peltz spoke to CNBC's Squawk on the Street. This guy is a killer in a figurative sense, obviously. In the coming weeks, Peltz's Tryon Fund plans to post on X, formerly known as Twitter, and add content to the website restorethemagic.com. Interesting. They're at war. So it begins. And this is actually stock market bullish. This is very, very bullish. When you get these activists in to shake up these woke boards, very, very good stuff. There's a lot of value to be unlocked here. I mean, think about Disney as a brand. It's amazing. It's a sin what they've done to it. Tryon filed a preliminary proxy statement Thursday, which outlines some of the reasons Peltz believe Disney shareholders should elect him and Rasulo to the board as they push to boost its stock performance. Those include getting Disney streaming profits to 15% to 20% by 2027. This is where the growth is. Disney streaming business currently loses money and won't break even until later this year. And we can go on here. So you're having an activist get involved with Disney stock, and Disney stock, even despite all of the, again, off of IRBT, despite all of the nonsense, the horrible management that they have, their EPS change last quarter was 173%. The 3-year earnings per share growth, 51%. ROE is disgusting, terrible ROE. You want for an S&P 500 company, you want to see ROE, which is return on equity, at minimum in the mid-teens. That we know they carry a lot of debt. Okay, PE doesn't look all that expensive for the growth that you're getting. and they have no dividend. I mean, fractional dividend. They need to expand that out. So let's take a look at what the trade is here on Disney. So this is a monthly chart of Disney. And the bull case here is pretty favorable. I mean, Bob Iger needs to go. He's got to go. He's already gone once. And his predecessor, the guy who left the company to, his heir apparent, had to clean up the mess and was ultimately kicked out of the company. And then Iger came back in to so-called fix things, and we see what damage that's done to the share price. So right now, what I'm looking at here is a wedge formation, a descending wedge formation, which has now been resolved, and that's the beautiful part. We have a breakout. We broke out back in November, and all we've been doing is consolidating. I think that this stock is a buy. Now, they will be reporting earnings on the 7th of January, not too far away. So I think the shot here is that what I would like to do is sell puts. And some people out there not familiar with what trading options or selling options is, you hear puts and you bet it's a bearish bet. It's not. When you sell the puts, you're the casino, not the gambler. The gambler buys the options, which generally expire 80% of the time worthless. When you are the seller of the options, you have the edge. So I would look to sell in front of earnings, I would sell a put spread, meaning I would sell a put and then I would buy a deeper out of the money put as an insurance policy, just in case earnings are really, really bad. After earnings, I would become far more aggressive with the position. And if the shares drop down, I would look to take advantage of it as long as these support levels here are holding. And if they gap it up, well, then I'll just roll up that put on Disney and continue rolling it up until I get it assigned to me. And then I'll probably go into a covered call strategy and trade the shares that way. And that's something that we're looking to do right now with NUGT, which is a leveraged ETF putting you long of the gold mining stocks. We have a series of naked put positions, but also covered as well. It's called a strangle. And we are basically neutral on the share price with a bias to the bull camp on NUGT. We opened up another 10 contracts at a 26 strike today. So that is Disney. Now, do I know anything about CMP? Is that Cabot Microelectronics? All right, so this is hot off the. I was at the gym today when I was watching this, and I do want you to take note that first off, Jamie Dimon, he's part of the establishment, like about 65, 70%. He will not. He's not the type of guy that'll he'll be worried about deviating from the rest of the group and saying what's on his mind. That does not make him not a shark. The guy's a shark. So I double subscribe, Bob, so I don't have to switch my emails from phone. Oh, thank you very much. Appreciate that. Thank you, Jody. A wonderful lady. So, and take note of the fact that he's not wearing a American flag. He's not wearing a Chase flag. For those not familiar, he's the CEO of Chase, runs about $7 trillion worth of money. He is a player. He's a whale. And he's good at his job. But I did short his stock. I've made money on it recently. As recently as today, we booked profits. But it bounced back, so thank God we're out of it. So knowing that he's part of the establishment, and the establishment hates Donald Trump, hates him because they can't control him. Here's what the establishment had to say about Donald Trump today. I can only play 30 seconds of this, or else I get a copyright strike.
But I don't think
Where's the volume? Let's try that again. I may have to go back, make sure I'm doing my this audio is on. Let's try that again.
but I don't think the voting.
What am I missing here? This just worked. Oh, you can hear it? Because I can't hear it on my end. Okay.
I think they're voting for Trump because of his family values. Now, if you look, just take a step back, be honest. He was kind of right about NATO, kind of right about immigration. Mm-hmm. He grew the economy quite well.
China virus.
Tax reform worked. Mm-hmm. He was right about some of China. I don't like what he did.
No, I said China virus.
Yeah, I understand. He may have been right. And I don't like how he said things about Mexico. I don't like, but he wasn't wrong.
Okay, so that's about all I could play without getting a copyright strike. Thank you, Jody. That is Jamie Dimon, a part of the establishment, putting his stamp of approval on Donald Trump. If you don't think the other titans of Wall Street are listening to him saying, whoa, he's got to use Ukrainian pin on, so he hasn't deviated from the pack that much, but he's putting his stamp of approval on Donald Trump, we got to start taking a look at this. And I think the signal here is to the Haleys of the world, God forbid, Nikki Haley, but to the Haleys of the world and the Vivek Ramaswamys of the world, start thinking about VP slots. Start thinking about it. And once Trump gets to South Carolina, if Haley can't carry South Carolina, which is her state, the Republican primaries are over, done. She's not going to win New Hampshire. I think it's South Carolina that comes up immediately afterwards. Once that's done and over, if she does not carry that state, she is out. So what I think is setting up here is messaging to the Trump camp, and I'll bet you right now that there are calls being made that you'll never hear about we'll back you if you pick a qualified, to their qualifications, a qualified VP pick. I don't think Vivek is going to be, in their eyes, qualified. I think DeSantis would be, but DeSantis had a horrible campaign. I like the guy a lot. I'm very disappointed that he ran. I said it was a wrong thing from the very beginning, but his campaign was so bad, and the fact that he didn't fire people early on, you got to wait until 2028. Me personally, I think that Vivek would probably be the best bet for him, but he's going to be under pressure to pick Haley. Will I be happy with that? No, I will not be happy that at all, and I hope that he does not pick Nikki Haley. Anybody else but Nikki Haley. I just shouldn't say that. I don't want to see Nikki Haley. Horrible person. He wasn't wrong. No, you're talking about Jamie Dimon. No, and that's the point, is that he's building up the case for Trump in front of every whale on the street has this channel on, watching Davos, making sure that Jamie Dimon's got his Ukrainian pin on, that they're in lockstep with each other. And to hear him talk positively about Donald Trump, whoa, that's huge. We all got to read between the lines. This was not a nothing. This is not a typical interview. Trump VP is Ben Carson. I like Ben Carson a lot. I don't think he's VP material. My brother back during the 2016 election wanted Ben Carson. I liked him, but I thought that Trump would get it. He got it. I'm glad Ben Carson got a position in the administration. I hope he comes back in because he did a really good job for the administration. But I think Vivek, for multiple reasons, Vivek, and one of those reasons is that Trump came out today. Trump vows never to allow a central bank digital currency. Now, remember, the other day when Vivek bowed out of the campaign, he immediately endorsed and went to, I believe it was New Hampshire, to endorse Trump, go on the stage with Trump. They met privately. I think that Vivek, one of his primary reasons for running was this Davos crowd, which he is a member of the World Economic Forum. But don't forget, we can't paint everybody with a broad brush, meaning just because they're part of the World Economic Forum doesn't make them bad. He was building a company. If I have speeches of him speaking about globalism versus nationalism, then I got to give a second thought, and that may come out in the near future. But I don't know what I don't know yet. So I'm subject to change my mind if I see stuff come out that he said that was completely anti-American. I don't know that as of yet. So he was building his business. So he gets a pass on that from me. I think that this CBDC issue is a Vivek issue. And Trump heard it, and he's like, okay, I got to be a part of this. And only a couple of days later, you hear Donald Trump, who hasn't spoken about this much, now all of a sudden he's talking about central bank digital currencies. I think that's the influence of Vivek Ramaswamy. Tip of the cap to Vivek on that one, if I'm right. Moving on quickly to, I'm going to go to this in a second, the Fed's balance sheet. Now, we're going to be talking in a moment about the weekly charts of the equity markets. Word up. I agree too, Michael. But before we do that, we want to get our ducks in a row, because after hours today, what was published was the Federal Reserve's balance sheet and what it did this past week. And I want you to take note of something. Now, for those not familiar with what the Federal Reserve's balance sheet is, it's basically the assets under management by the Federal Reserve. But what are those assets? Most of those assets are treasury bills. When nobody else wants those treasury bills, or there's not enough of a market for those treasury bills, well, the buyer of last resort is the Federal Reserve. That's why rates got so low. But the Federal Reserve has been wanting to roll off that debt off their balance sheet, which they've done quite a bit of, as you can see over the past year and a half or so. So that's a good thing. It's driven up interest rates. The problem is for the economy as a whole, longer term, not short term, longer term, is that the rate of change, the amount of debt. In fact, the week prior, the Fed's balance sheet expanded, but last week it came in a little bit. So I think what we're seeing here is a double bottom on the Fed's balance sheet. We won't know until next week, because they've already implied that they're not going to be rolling off as much debt as they have in the past. What does that mean for yields? Yields go down, or at least they pause and don't go up as much, because the Federal Reserve is not dumping as many treasuries onto the treasury market. Less supply. That way there's more demand for the bonds. What does that do to yields? Yields come down. What does the equity market need to rally? They need lower yields. Now, why might we get lower yields? All you need to do is take a look at the U.S. Empire State Manufacturing. You can look at the Philly Fed. You can look at the Chicago Fed. All these charts look alike. Abysmal. They are in contraction. The economy is slowing very rapidly. Now, this is off of Northman Trader, and I understood immediately what he was talking about. I always talk about the yield curve, and the 10-year versus 3-month has uninverted. What has not uninverted was the 10-year versus 2-year. This is the one that we watch here at the Contrarian Trader. It has not uninverted. In fact, it is now down on the week after ripping out of the gates on Tuesday. Moved up higher. Let's take a look at it. Initially, we were higher. Now we've pulled back. That, however, is, to be fair, that we do have a breakout on a monthly chart, a massive breakout. And if we continue up higher, then the equity markets are going to find it very, very difficult to rally from here. So this chart is one of my primary charts to decide, do I want to be net long? Do I want to be neutral? Do I want to be short? As it stands right now, we are down on the week. So I'm not looking to put on any more short positions. In fact, I took one off today. Profitably. The other thing that we're looking at, and I'll go through the moment, is the CME Fed Watch tool. And that's an indicator of what market participants are expecting for March and May, where they're expecting rate cuts. As of now, the expectations have come in some. And I warned of this on prior live streams. And what has the equity market done? It's gone down. Before we get to those charts, really quick, I want to talk about Senate passage stopgap bill. House Freedom Caucus insists on border measures. We'll see whether or not they buckle. The Republican Party to me is, as I always like to say, the Charlie Brown to the Democrats' Lucy. What does that mean? Well, if anybody's familiar with Charlie Brown, Peanuts characters, Lucy always tees up the ball so that Charlie can come in and kick the ball. But what does Lucy do? Every single time he goes to do it, pulls the ball away, and he falls on his back. That's the Republican Party. The Democrats set them up. The Republicans run for the deal. The Democrats pull the ball away, and right on the back, the Republicans fall. I don't blame the Democrats. They believe in what they believe in. They're Marxists. That's okay. At least they're honest about it. The Republicans pretend they're the man of the people, and they're not. They're the establishment along with the Democrats. So we'll see what we get out of this. All right, they've already done this once. They're going to do it again. They got to shut down that border, shut down the government. If they don't get that message by now, there's got to be a primary of every single Republican in the Senate and the House that signs off on any deal that does not close down that border. Either close down the government or close down the border. One or the other. Simple as that. The message couldn't be simpler. One's popular with the people. The other one is not. What do you want to do? And those that vote for the deal and not to close down the border, you know that they're owned. They are owned and they have to go. Our last chart before we go to, this is really a trading opportunity, really. And I know a lot of people are going to say, wait a minute, you told me that China is uninvestable. I believe that. The however is that I see opportunity, so I may speculate in here with options. Not a ton of money, but worthy of the speculation. So, China's plunge protection team. All right, if you don't know what that is, the United States is a plunge protection team. Basically, it's members of the cabinet in the White House, Treasury, which is part of the White House, and the Federal Reserve. They all get together, and usually they get active when you have a bloody day in the equity markets, and the next day setting up for a bloody day. And what they'll do is they'll go in and they'll buy the futures market and reverse the market, at least for the short term. That's what they do. So the Chinese, it's not as if the communists are manipulating the stock market. Well, our communists here do that as well. So the Chinese version of the plunge protection team buys tens of billions of dollars in ETFs, and they're trying to stabilize the equity markets over in China. Now, is there an opportunity here given the fact that look at the bounce here. Given that you have the government now involved with buying up these ETFs, I think yes. The question is where, using the FXI, a monthly chart, we are approaching a support level on the FXI at around, let's call it $20 a share to be specific, $20.43. If that fails, we're going down to $16.83. Yes. Sorry, Falcon. Yes. BlackRock, the major banks are involved as well. That's how the government covers their tracks. So I think that we're nearing historical support on FXI. Momentum still looks horrible. So this is why I'm saying it's only a trade. And the trade I would put on here, really beaten up. Here are these support levels again. We have another support level at 1894. What we want to do here is going to be an options trade. So what I may do is, let's do this. We'll talk about the trade in a moment. Yeah. Whenever you see a descending wedge formation, normally a descending wedge gets resolved to the upside because you have so much compression at the apex of this consolidation that it gets resolved to the upside. There are no more sellers left. Now, when you get a breakdown out of that consolidation with one trading day left to go, maybe they'll rally it back tomorrow. That is generally a capitulation sell-off, meaning the last of the sellers are just done. They're throwing in the towel, and you may get a sell-off down to that $20 handle on the FXI. So the question is, what is our IV rank? Do we want to buy the options or do we want to sell the options? Are the options expensive? If the options are expensive, well, we want to be sellers of the options. And they're pretty expensive. They've got 43% IV ranking. I like that. So I'm looking to sell premium here on FXI, probably going out. We don't have to worry about earnings. That's the beauty of it. Let's go out. We got to change this to our Greeks. And we want to go out. Our sweet spot is around 45 days. March the 1st expiration looks really sexy. Well, these options aren't bidding much. So if we sold the 20 strike, we would collect about 30 cents at the midpoint. The probability of the shares trading out of the money are around 75%. I got to be honest with you. I'd rather buy the options, buy a call spread, meaning buy a, let's call it a 19, but we wouldn't go out to March. We want to go out further so we don't get any time decay. Let's say we go out 120 days out to May. The shares are trading at current at 21.53. We buy an in the money. Where are my deltas? We want a, let's call it a 80 delta. And I want to sell a 20 delta. And that would be the 25 strike. So that would cost me $3.68 per contract to get long of FXI. And the premium I generate from the sale of this call helps finance the trade. So I'm kind of liking that trade rather than selling the premium. But I want to make sure that we hit support first before we execute. So FXI, interesting as a potential trade. I don't understand which chart you're looking at. FXI, that's the chart of the Chinese, what is it? The large caps. Weekly chart, Chinese mid caps. Now, I would just book a profit here and exit. I wouldn't stay long. I still think that China is uninvestable. This is not an investment. It's a speculative trade. DVN, if you have time. Devin is an energy company. Not sure if we're going to have time, Pete, but I'll try to. I have to go to the weekly charts now. We only have 13 minutes. I noticed on Wednesday the energy companies hitting new lows. They bounced today. Oil was up. We're going to go to that in a moment. I've said that too, Bob. Republicans are trying. Yeah, it's amazing how they just sell out. You know, they come from that establishment of elitism, and now the Democrats have joined them. You know, it's the uniparty. Forget about the Republican Democrats. So that's all old stuff. You got to be a libertarian. Simple as that. All right. So let's talk about the CME Fed Watch tool. And as of March, we were hovering between 55 and 59% probability of an ease today. This needs to get moved up for equities to move up as well. Now, going out to May, probability of an ease in May is now up to 100%. So what would help get this probability up higher tomorrow? Easy. At 10 a.m. tomorrow, we're going to have consumer sentiment, which is going to get released. Now, let's talk about that for a moment. The consumer is tapped. They're not happy. Now, we just had a blowout on retail sales, and that would not seem to make a lot of sense. Well, consumers are using buy now, pay later, and they're maxing out their credit cards, the last of the credit that they have. Does that make them happy? No, it's not going to make them happy. They're just getting more into debt. So I don't think that consumer sentiment, the shot here for us is that if consumer sentiment comes out bad, I mean, really, really bad, that means that you're going to see the Federal Reserve having to cut rates a lot quicker because the consumer is the backbone of the economy. We are a services economy. So with that as a known, can this market move up higher? Yeah, it can. Let's go through some charts. Yields, weekly chart at resistance. They were strong today, and they're up about a percentage point on the day. Bitcoin is down about 1% on the week. I'm out of Bitcoin. I sold that last week, the day after. As a matter of fact, I had to sell it. SoFi. Anyway, that's a different story. I already told that story. TLT, 20-year bond ETF. We own it. I'm probably going to be buying more in the coming days in anticipation of bad economic data forcing yields down, driving up bond prices. Tips down on the week. The dollar, major headache for gold investors. We close out the session today above the 20-week moving average. The 20-period weekly moving average and above resistance. One trading day left to go. A lot can happen here, and volume has been abysmal. I don't think that this rally's for real in the US dollar. Daily chart. Now, momentum looks strong. It's rising, RSI rising. Again, these are momentum indicators. So the dollar on a momentum basis is looking very good. The problem is with price action. Yesterday faded, today faded. Usually that's a sign of at least a short-term top. You saw it back here, then you went into a correction. You saw it back here, went into a correction. You saw it back here, pulled back. These are not bullish candlesticks. And if you're not familiar with the candlestick charts that I talk about, I have a 5-part video tutorial linked below. Take advantage of it, free. So the dollar not looking good. If the dollar corrects, guess what that means for the Dow Jones Industrial Average? It goes up higher. Why? They export a lot of their goods. That makes their goods cheaper when the dollar goes down. What else goes up? Emerging markets. Why? Their debt is denominated in US dollars. When the dollar drops, it's like a tax cut. Emerging markets are getting annihilated this week. Why? Rising US dollar. What else does well? Gold, silver, gold mining stocks. They'll go up. Why? The gold and silver are denominated in US dollars. Moving on. How does it look for competing currencies? Euro, potential doji star formation. Not a lot of selling conviction here. I think this just finds a support level. It rallies. Dollar pulls back. Yen. Basket case. Not much to talk about with the yen. Volatility. VIX on the week rallied up to its upper band of resistance and has been rejected. Still up on the week. Rising RSI. One trading day left to go. Daily view. We closed down today with a rising market, bullish. Dow Transports on a weekly chart, folks. One trading day left to go. Bullish key reversal bar, one of my top 5 favorite candlestick patterns. And take note of what RSI is doing. It broke out along with price. Price pulled back, so did RSI. But what is RSI doing? It's holding its prior breakout and is now rallying off of that support level along with price. One trading day left to go. But if we close like we are here right now or better, bullish moving forward for the Dow Transports. And as go the Dow Transports, so generally goes the Dow Jones, the S&P 500. Speaking of the Dow Jones weekly chart, we are trading well off the lows. 37,000 is support for the Dow Jones, and we are down about 1/3% on the week. Let's take a look at the daily chart. Daily chart, bullish key reversal. We're not out of the woods yet here on the Dow Jones because, excuse me, these, I know a lot of people, they poo-poo indicators, okay? I watch them all the time, but first and foremost, price and volume action matter most. The one takeaway with the stochastics is that when you have your stochastics trading down below 50, rallies tend to fade. And this rally, while we close near the highs of the day tomorrow, they could still gap this up tomorrow. If the street really doesn't like that consumer sentiment number, they'll sell that rally. So be very careful about chasing this up tomorrow. Wait and see how it closes before you decide to go buying. Volume was very good today. S&P 500 weekly chart consolidating off the lows of the week. Stokes still bullish. Daily view. Daily view, Bob. Daily view. You'll get it. Okay. Daily view. We broke down a few days ago, and I've been calling for a rally to do a retest of the breakdown point. So just because we're up today, we're not out of the woods yet. I will say this about the S&P 500. Momentum on the S&P 500 is nowhere near as bad as it is on the Dow Jones. We're still above 50, so that is bullish. Trip Qs. Did we go have new closing high today? Close 409. Yeah, new closing high today on the triple Qs. Volume's going to be light, but it's a weekly, abbreviated week. So take that into consideration. And we have another trading day left to go. Daily view. We closed right up and into a resistance level. Stochastics had a breakout. We've been tracking this. RSI, did it break out? Looks like it did break out. Yeah, it broke out. So new all-time highs this week on the triple Qs. Technology, all-time highs. Semis, all-time highs. Biotechs, we're long of this. I'm kind of good with my position. I have a strangle trade on this. I did not roll down calls. I think they're going to rally it in the coming days. Let's go to a daily chart. Yeah, I'm not going to roll down the calls here. Under distribution, how do they close it out on the day? 30-minute view. I know they rallied it back off the lows. I'm good with my trade right now. No change. Consumer staples. At current, there's a breakdown on the week. We had broken out last week. This week, we're threatening a breakdown. Discretionary names, doji star formation, a sign of indecision. I would say that this is more bullish than bearish, even though we're down. All down weeks are not made equal. What does that mean? Well, a doji star formation, which is one of my top 5 favorite candlestick patterns, link below, free. After you've had this downtrend, implies that there's a tug of war between bulls and bears. And this will probably get resolved the following week if we close like this or better to the upside. Now, if we sell off tomorrow and we close near the lows of the week, then that puts the direction in question, probably to the downside if we break support at 170. Emerging markets. We don't look at EDC. We look at ex-China. And you can see that given the pullback or the rally in the US dollar, you've seen a pullback in emerging markets. Energy stocks. Now, energy, what it's doing right now, this is a very, very interesting trade, potentially. What you need to keep an eye on, first and foremost, is that up here, where it says XLE versus USO. USO is an oil ETF. Look how closely tied they are in correlation. They are correlated 84% of the time, meaning 84% of the time, if oil closes up, energy stocks close up, just the way it is. So we've had a brutal beating here on the energy stocks since the beginning of the year, but we are now at a support level. And today, while energy stocks closed down on the day, they rallied back dramatically to recapture a support level, which they could have potentially lost today. Now, what did oil do today? That's the key question. You can't buy energy unless, of course, oil is moving up as well. Let's take a peek. Weekly chart, oil is up on the week, 1.75%. Nice little bullish key reversal bar here. And on the day, we were up 2% on oil. Momentum is building. RSI rising, Stokes rising. I think that we could put a trade on the energy stocks. The beautiful part is with the energy stocks, this may have changed because I looked at this early this morning when they were dumping energy. I looked how expensive the options were. Oh, they're still expensive. I would sell a put spread here on energy. That's what I would do, going 35 days out, 20 delta trade, and I would make it a cash flow strategy. If we do get a rally in energy, then I would sell a call spread against that put spread, creating either an iron condor or strangle, whatever you want to put on. It's up to you. but you're generating cash flow off of that strategy. Gasoline prices rising. This is inflation. Oil rising is inflation. Gold. All right, gold has been very, very disappointing. Last week, we rallied off the lows of the week. Will it happen again this week? Maybe. One trading day left to go. We're down at current nearly 1.5%. We were up today on gold by about 0.75%. We respected the 2,000 mark. We have a call option position on this trade. We also own gold stocks. I own the physical. So I really do want to see a breakout here on gold. If we see this, if we see a probability of an ease rise from March, May, tomorrow after consumer sentiment, the dollar will drop probably. If the dollar drops, then you're going to see gold, silver, the mining stocks rally. Silver, weekly chart, a bloodbath. I wouldn't touch it quite yet. Silver mining stocks, gold mining stocks. I would sell out of the money puts here. I wouldn't buy them. Uranium under pressure. All right, I'm already over time, folks. I'll see if I wanted to do chart requests, but I just don't have the time unless I got to go to the members area. And I'll always be available for members. And Pete, I'll do Devon Energy for you because you've been around for so long. You're a loyal watcher, so I'll make the exception for you. Larry wants UNG. Franklin wants uranium. Okay, so uranium, let's go to TrendSpider. Folks, if you're not using TrendSpider, you're trading with one arm behind your back. 35% discount code below. Automated technical analysis. Before I forget, Devon Energy. Not looking good on the month. We are nearing support. I'd be a buyer of Devon at $38.50 per share. Right where you have the support level. How do I know that support? Because it's drawn in blue. Did I draw that in blue? No. The algorithm did it. Click of a button. There you have it. I also know it's support because you have a volume shelf right below. So I'm going to create an alert here. And we'll keep this active for a few days. And we're good to go. Weekly chart. We need to rally on Devon because if we fail to hold this fractal trend line right here at around $42 per share, we're going down to around $38 a share in the coming week or two. So Devon's in a lot of trouble here. It needs to rally tomorrow. I want to know if it rallies through it. Okay. Buy, God damn it, if oil strong. Okay. UNG. Now, UNG is down on the week. I think what we're going to do here on UNG, let's overlay. We don't have any support levels below. We need to hold $5.50. Is UNG really down to $5.50? Wow. If we close down below that mark, we'll probably come down here to right where we reversed and formed this hammer formation at around $5.02 on UNG. It really needs to rally. Let's see what it did today. Daily chart. Yeah, it broke support today. And I wouldn't buy it. I think what it's going to do tomorrow is going to rally and try to recapture the support level. Natural gas is very volatile. Now, let's say they do rally it and it manages to recapture one or both of these support levels. Then I'd be a buyer, because now what you have on UNG is a higher low. And that's what you want to see. So right now, I'm not a buyer of nat gas. I would wait to see how we close out on Friday. If we fail to hold support, we break down further. We could head down lower to around $5 a share. If we gap up and hold above, let's call it $5.60 per share, I would entertain a buy, and I would add more on strength. Last chart up, URA. This is uranium. It's been in fuego. Weekly chart. It's too extended. It's too extended for me. It's a commodity. It can go higher. It can go a lot higher. But to establish a trade right now, no. I'd be looking at this trade from only one lens. I wouldn't short it, but only one lens. If I were long, where would I be looking to get out to save my profits? That's the lens that we'll look at it through. And that lens takes us to if we close down below 29.79, I'd be looking to take profits off the table, because when this goes, it's going to go really, really hard, and you can see profits evaporate very quickly. So maybe this will rally and close at the highs of the week, and we get continuation higher highs. The other way to play this is it's down 3 1/3% on the week so far. What you may want to do is establish a trailing stop loss order, use a 3 or 5% trailing stop loss order, and let the market take you out. So that would probably be the best bet, because you do run the risk of leaving some money on the table here if you were to take profits now. So I would consider using a trailing stop loss order and let the market take you out as high as possible. Because think about if you had a trailing stop loss order back here, you could have been taken out. Like, it would have reset up here at around $27.26. And by the time it pulled back to the lower end of this wick, you probably would have been taken out of the trade, and you would have avoided this sell-off here. Or if you had a trailing stop loss order that triggered up here, think about the damage that would have been saved if you had that in place. That's what I would do here. So either a trailing stop loss order or a stop on a close below 29.79 per share. Folks, thanks for being here. Like, subscribe. You know the deal. And I'll talk to you soon. Everybody have a great weekend, a profitable trading day tomorrow, and I will talk to you soon. Be well.